Welcome to Cracking the Satoshi Code. My name is Joe and I'm your host. On this channel, we're going to be reviewing the Bitcoin cycles and how to take advantage of the repeatable pattern that exists. There's no hype, just help on this video. I'm not here to talk to you about news or what Trump's saying or what bill is going to pass. We're going to purely look at technical analysis to give us confidence that it's time to start buying into the Bitcoin 4-year cycle. Why Bitcoin? For me, my journey started in 2017 back in Vegas when me and my buddy Rob were trying to figure out how to watch the Eagles on a bootleg internet site because DirecTV was getting too expensive. Luckily, that ignited a passion in me in Bitcoin, but also we got to watch that fantastic, incredible Super Bowl season. Shout out to Rob on that one. The first cycle, I lost a little bit of money. I decided to apply technical analysis to help learn how to make money in the markets and give me an edge. Since then, I've had 2 successful Bitcoin cycles, and I want to share that knowledge with the people that are closest to me, which is why I'm creating this video today. The Bitcoin chart in front of us is on TradingView, which is the tool that I'll use all the time. We're going to stick on the weekly, monthly, and yearly time frames to do this analysis. And I'm going to start off here by showing you just a simple example of how Bitcoin works. When we look at the halvings dates in just a moment, the Bitcoin halving helps it stay on a 4-year cycle. The Genesis year is a little unique. The Genesis years in the beginning, but what we can see from this is that it peaked out in 2013. We went down for 1 year in a bear market. Then we went 3-year bull market to the peak, 1-year bear market, 3-year bull market to the peak, 1-year bear market, 3-year bull market to the peak, and we are currently, if things are repeating like they always have, a 1-year bear market. And why does Bitcoin operate this way? Why is it so similar and why does it rhyme? For that, we're going to go to this chart. We're going to look at the halvings on a monthly time frame, and the halvings are represented here by the yellow lines. If you don't know what a halving is, the halving is every 210,000 blocks of the blockchain, Bitcoin rewards the miners that process those transactions with half of the Bitcoin, thereby always creating scarcity. Bitcoin will continue to have halvings for another until 2140. And just a fun fact, from the year 2040 to the year 2140, 1 Bitcoin will be created. It will take 100 years to create the last Bitcoin. Therefore, this is the most scarce asset ever created by humanity. When the halving occurs, the miners that are processing the transactions still need to pay rent, still need to pay for electricity, still need to pay for computing power, still need to pay for labor. So therefore, Bitcoin has to go up in order to cover those costs, or else the miners go out of business and Bitcoin dies. And it's not going to let itself die. So it's going to force itself to go up in price. A lot of times we hear the news that Trump's going to do this, or Elon's going to do that, or this country's buying, or Michael Saylor's buying, and none of that matters. The world needs Bitcoin. Bitcoin doesn't need the world, other than power and computing power. So if we take these halvings that occur roughly every 4 years, they force us into this cycle of up and down. The theme of this video is to think of Bitcoin by time, not price. Nobody knows how high it's going to go. Nobody knows how low it's going to go. But what we do know is, generally speaking, there's a time frame to follow. And I'm going to show you even more than just the 1 year down, 3 year up. So I'm going to go to the halving in 2016, and I'm going to go back 500 days before that, and we are at the bottom of the bear market. Then I'm going to go from that halving and go 500 days before that, and we are at the top of the bear market. The next one in 2020. 500 days before the halving, we are at the bottom of the bear market. 500 days after the halving, we are at the top of the market. 500 days before the 24 halving, we are at the bottom of the market. 500 days after the 24 halving, we are at the top of the market. The next halving is scheduled to be April 28. It does fluctuate a few weeks here and there in either direction. 500 days before that is roughly November of 26. Now, that's an important thing to remember, because it's not the only time you can buy, but between now and November really will be the optimal time based on this timing cycle. Here's another great example of Bitcoin being looked at in time versus price. I'm going to go from the peak of 2013 to the bottom of this bear market. It's 1,800 days. Okay. I'm going to go from the top of this cycle to the bottom of the bear market. It's 1,800 days. Then I'm going to go from the top of this cycle to the bottom here. If it's 1,800 days again, give or take, right? We are looking at October of 26. Now, you can see how Bitcoin just repeats over and over and over. So the goal of this channel is to take advantage of that time. We don't know how low it's going to go. We don't know how high it's going to go, but we do know the timing. So right now we have two indicators in October, November of 26 being the bottom. I'm going to show you one more thing related to time. We're going to go from the top of the cycle to the bottom of the cycle, the bear market, 426 days. But this is where it gets interesting. We're going to go from the top to the bottom, 365 days exactly. We're going to go from the top to the bottom, 365 days exactly. So if we apply that here, we go from the top of the last fall cycle to 365 days out. That is October of 2026. So we have three timing indicators that say October and November. It may not be the exact bottom, but it will be the best time to buy. The numerous indicators we're going to review in the next few videos will really show you that I'm going to have about 7 different instances aside from this time chart that will show you its ability, confidence it's time to buy. I am already buying because of one of those indicators, but just slightly. We're going to I recommend, and what I do is I dollar cost average, meaning I buy a little bit here and there versus all one lump sum. I don't want to buy all my money in and see Bitcoin go down 50%. I want to buy little by little between now and the fall of 26. I think it's pretty amazing that Bitcoin repeats in this way. We can all take advantage of that. I hope you join me on this journey. I'm not a financial advisor. I can't give financial advice. I'm just here to show you these repeatable patterns to help give you confidence to join me in conquering the matrix one cycle at a time. Thanks, everybody.